I'm seeing participants who've been in the space. So these are precious metal institutional investors. These are high net worth individuals who have had exposure to precious metals. These are investors that have owned companies like Agnico Eagle, that's through $200 a share, or Newmont, that's through $100 a share. They are now taking larger positions down market. So that's where the capital is coming from. We've really yet to see the generalist investor come into the space. But now that you've seen a couple of back-to-back quarters of outperformance from precious metal equities, it's starting to attract more and more generalists.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics on what sure is a beautiful day. We're recording on Tuesday, so we'll see what happens by the time this baby airs on Wednesday. But as you can see, I'm joined by Uncle Hunt, aka Sean Kun of Dolly Varden Silver, who I know he's got a lot to be happy about today, and we will dig into all of that as well. Although on that list, Uncle Hunt, I'm assuming it's safe to say that looks like a 4 there, and it's not even, I mean, Friday the futures were crossing 40, then they open up higher on the Far East trading on Sunday night. Got up to 41.99 and 3/10 of a cent yesterday. So certainly exciting times for silver investors, and I know it's an exciting time for someone like you, Sean, since you've come on here several times in the past couple months and explained how when people were worried about everything in the mining space was getting clobbered, and I, as well as many of my viewers, were saying, okay, well, is there someone who's actually be able to take advantage of buying undervalued assets while they're clobbered? And that's been a core part of your strategy, which we'll get to as well. But first, Sean, beautiful to have you on here. And how are you, my friend?
I'm doing really well. Thanks for having me on, Chris. We met about 5.5 years ago, and I remember, we had watched silver just after we met get sold down to under $12, and man, it's been a long ride, but it's been a rewarding ride. I'm up north of the border, up here in Canada, and we've got $56 silver in Canadian dollar terms, which is an all-time high. And I think most of the world outside of the US dollar is experiencing that. I was talking to a friend, a colleague yesterday, and they said to me, maybe it's time to sell silver and buy gold. And they've got a lot less experience in this business than you and I do. And I said, well, let me walk me through your rationale. And I said, and then they walked me through the rationale, and they thought, silver had performed really well on a percentage basis. And I said, look, I go, you actually need to do the opposite of what you're thinking. Silver in US dollar terms is, like, this is what I said to that person. I said, look, I said, if you told me I could only own one thing, only one asset class, that, if the conviction I have for silver, look, I think there's a lot of things that are going higher, but silver is the one thing that hasn't gone high yet. It's still below its old high. If I could only pick one asset to own, it would be silver. And there's a million reasons why, from how much we're mining to how hard it is to find this stuff. But if you kept it really simple, it hasn't performed. It's underperformed. We today are lower today than the silver price was in 1980. And people would say, well, it just spiked up there. Well, it went back there in 2011, right? And so silver is still really inexpensive. And that's on a standalone basis. If you factor in on a relative basis to where all these other assets are, silver is, I think, the best investment choice today.
Yes, and I will pull our silver chart back up again. Funny you mentioned the 12 bucks. That looks like right around there. 1164 it got down to. So we're Sean, we're a 3+ bagger on silver since then. And that was right around when we met. So certainly interesting times. And people have been wondering, when is silver going to finally catch up with gold? I don't know if we're quite where many silver investors are hoping for or expect yet. Certainly a good sign. First time since September of 2011 that we've been above $40. And to start with, just any thoughts? I think a big part of the reason why we're seeing this latest leg now is that Jerome Powell's speech at Jackson Hole was just, I mean, I might write a book about that one someday, where he talked about how important price stability is. Yet, in fact, Sean, maybe no one has been able to explain this yet. So we'll give this one to you first to get things started here. Inflation's been above the Fed's mandate for over 4 years now. And the plan to achieve said price stability is to lower interest rates while the inflation rate is still above the mandate, which they've also talked about getting ready to just raise the mandate. Whole other story, but is that what the markets are responding to here, would you say?
I do. And look, I took a little road trip over the long weekend with my family, and
Ooh, very
we had
nice.
a we had 4 hours to kill as we were driving from the interior part of the province back to the coast. And I was talking to my kids about what I think is the stagflation environment we're in today, and how it's got some similarities to the 70s. And to my surprise, they're teenagers, and they're quite captivated by this idea of rising prices and little, actually in Canada here, negative growth. So that's where I think we are. I think, quite simply, it's a sad time, and it's a tough time for most families and most people. People are getting squeezed, and I think, what I'm trying to do here is I'm trying to give people a solution. We're full of a world with problems and challenges, and we can point to reasons why we think we're in this spot. Some people will point to the tariffs, and others will look for. But the reality is, look, we are in this stagflationary environment. And the only way that I think you can protect yourself is with hard assets, and finding a torquey hard asset that's going to be appreciating quickly is difficult. But I think silver is demonstrating in 2025 it is the number one asset to own.
Yeah, I know what you mean. And if you add on to that, that at least at the heart of it, what got me into gold and silver was the debt. And so we're at 40. It's not like, well, the debt finally defaulted. They realized they couldn't pay it. Inflation's higher, and the silver went up to 41. This is 41. Well, that elephant is still peeing on everyone in the room. So I love that you're talking silver with the kids. When you said you went on a road trip, I was saying maybe he was just playing Jerome Powell clips for them and giggling. Although, Sean, I heard you also mention what happened in the 70s and 80s. I don't know if I told you, I've been finishing up a silver report. Ended up being a little longer than expected, yet happen to have this section in here where, again, to be clear, I'm not saying because it happened then is what's going to happen now. Yet, after reaching $2.50 in 1968, by October of 71, silver price is down to a buck 31. And then by February of 1974, it reached $5.78, a 4.41 multiple, which, if we did get something similar to that, would give us a $146.92 silver price. I guess that number would be a little higher if you use today's price. But at least showing historically, we have seen some big moves. And I guess the other thing to add to that I would love to get your comment on, I know we've talked about this before, but in addition to the fact that the debt is sitting out there unresolved, we continue heading down this path. Now, this doesn't apply to gold, but with silver, where we have deficits, we've seen inventory drawdowns, mining sector, at least capital is coming back in now, but Any updated thoughts? Any of the conferences you go to? I see the banks write about it more to their institutional clients now, and we're seeing metal go into the ETFs. But what are you hearing out there about what are people saying about the deficits and where this could lead to?
Look, I've been around the junior mining sector for 22 years. And so these are companies, a lot of them starting at sub $10 million valuations. And, a big company in our space is $1 billion company. And so, being around and financing and supporting these companies for the past 22 years, I would describe the environment we're in today as probably the second best environment I've seen from a finance perspective for just the amount of capital that's available for the sector, and also the valuations. But that's on a nominal basis. If we look on an inflation adjusted basis, or if we look at it on a relative to debt and deficit basis, it's actually not as impressive. But it just goes to show that the sector's been in a huge depression. One of the things that your viewers can reference is the TSX Venture Exchange Index, which, despite being at a year high at call it 840, 850 points, it's a far cry from the 3,000 points that it reached back in the last best mine finance market that we saw in and around the 2010 era. So look, what I'm seeing is I'm seeing participants who've been in the space. So these are precious metal institutional investors. These are high net worth individuals who have had exposure to precious metals. These are investors that have owned companies like Agnico Eagle, that's through $200 a share, or Newmont, that's through $100 a share. They are now taking larger positions down market. So that's where the capital is coming from. We've really yet to see the generalist investor come into the space. But now that you've seen a couple of back-to-back quarters of outperformance from precious metal equities, it's starting to attract more and more generalists. I was just doing a tour up at Dolly that actually went beyond Dolly Varden and went to some of the other great historic mines up in the neighborhood. And we were touring some investors from Texas, investors from Boston. And these were investors that were managing college endowments and pension funds. And, I think amongst the four investors that were attending the tour, there was probably about $10 billion of assets under management. And amongst this group, let's say they were 1% weighted to commodities exposure. And they were contemplating, and they had a lot of conviction of going from 1% to 3%. And what that would mean from just these four investors, it would be a $200 million exposure that would need to be moved into a sector that's got a market cap that's smaller than some of the big tech names, individual tech names. And so I think, there's some very astute successful investors in the industry, people like Rick Rule, who describe it as pouring a whiskey bottle into a shot glass. You're going to have that over pouring of demand. And that's why we're seeing companies move up so dramatically over this last few months. And so, the silver prices, to me, it's moving slowly, but these equities are really for investors who are looking for that torque, something that could be pretty powerful.
Yeah, I certainly know what you mean. And yeah, especially when you talk about how small the silver market is, I was thinking $200 million. It's about 1% of at least the annual silver supply. And you could purchase with that. Not saying all that will go into silver, but I get what you're saying. And Sean, here's another one that I would love to run by you. Maybe you can test this out on folks, see if anyone else is looking at this math because it seems relevant to me. And Let me pull this up here. People may be familiar with an analyst named Daniel Galley who writes for TD Securities. I mention him all the time. He writes interesting papers on silver. The one he had out in January was Silver Market Walking into a Short Squeeze. Here he mentions with only 305 million ounces remaining in LBMA's free float, this was as of December, we're getting near critical thresholds because 250 million ounces have been required on the average trading day. Makes sense so far? So you're
Makes
saying
sense.
250 million ounces, you get down there, now you're talking about trading liquidity. First of all, that free float now is down to 276.9 million ounces. Yet and I'm actually trying to get in touch with Daniel to see what his comment on this would be. Excuse me. Although what's interesting is that, we hear a lot about this short position that the banks hold on the COMEX, right? Which when the banks comment on it, they say, well, that's our hedge against the physical holdings we have in London. I'm not sure that I buy that that's necessarily one to one, but here's the thing. As of about a week ago, that short position was up to 220 million ounces. So if that truly is a hedge, then that would mean 220 of the remaining 276 million ounces are hedged, leaving the true free float at about 55 million ounces, 200 million ounces below what Daniel is saying is needed on the daily turnover. Now, if they are not hedged one to one, that means at least one bank has been short as the price has just broken through $41. And if I may add one last part to that and then get your comment, you mentioned Rick Rule, who I know well, and he talks about how after the LBMA wrote that report in April of 2021 saying they were weeks away of running out of silver had the demand kept up. He talks about how he cleared out the inventory in multiple cities. Doesn't seem like the most stable foundation. And any thoughts on any of that?
Yeah, it's interesting. I saw there was different levers and tools that were pulled on back in April of 2011, right? Where, if you look at margin requirements that were raised, I feel like this bull market in silver is a bull market that's really been building for decades. And we made the first attempt back in the spring of 2011. 10 years later, we had the second attempt. And at both times, the price had moved up dramatically in weeks, 50% moves. If you go back to the summer of 2020, you saw that big rise to $30 silver from a low of, call it 1160 in the spring. And then, you had the famous silver squeeze, coming off a Sunday night, going into a Monday morning back famously in January. Chris, there's probably five people on the planet that had a big impact on that, and I'm looking at one of those people right now.
Is there someone in your office? Got Eric Sprott over there. I know he's an investor in Dolly. So who are you talking about here? Come on now.
So, and we all thank you in the community for the work you did back in 2020 and 2021 and continue to do. But what I think this, it's like, we have a saying in the microcap, nanocap land about when your share price, and again, like, when Dolly Varden was a 20-cent stock. And what I've learned in 22 years, in order to take a stock from the pennies to the dollars, they say you need three attempts to keep it there. And using that same thinking and turning our focus over now to silver, 2011 being the first attempt, 2021 being the second attempt, this third attempt, because of the structural deficits, because of the growing industrial demand, because of the waning mine supply, because of the issues that are being faced to open pit mines in the world's number one silver producing nation, we are now building up to a moment where when the dam breaks, you're not stopping at $49. It's gone. And I think you're going to see a move that probably is, it wouldn't surprise me if silver shot up to 60, $75 an ounce before was met with any serious resistance in selling. There's been, the term triple digit silver, I first heard from Keith Neumeyer. Um, 4 years ago, I spent some time with Eric Sprott, where he laid out the case for $300 silver. If you think about where we are from a deficit standpoint, from a debt standpoint, where all other assets are relative to where they were 4 or 5 years ago, that $300 silver number might need to be revised even higher. So, look, I just think silver is, I don't have a crystal ball. I can't tell you what's coming tomorrow. I can't tell you how long this is going to take. But if you study the facts, and there's nobody that I know in the silver community that puts them out the way you do, Chris, we are in a very fragile place right now in terms of, if demand continues, we are going to see some price shocks. And I haven't parted with any of my physical silver, and I don't plan to. It's not a trading instrument for, I think silver is, even more special than gold for a lot of people in North America. They confiscated or tried to confiscate or ordered gold ownership illegal. They flirted with that idea in silver, but never made it law. And so there is a huge part of the U.S. population, predominantly male, in the age demographic 45 to 80, that, you know, from our cold dead hands, you're going to pull out this silver. And so that's what I think the difference is. Like, this is not a trade for us, right? Um, this is going to we're going to need a new term for diamond hands, because what you're about to witness in the precious metals universe, particularly in silver, is going to be like no bull market I think the world's ever seen.
Yeah, well, we could call them silver hands, maybe less hard and rigid, but more flexibility and matrix-like maneuverability. So, and speaking of some silver hands, Sean, you mentioned back in February, March of 2020 when silver dipped below $12, and I think a lot of people remember that well. What was the actual date you took over Dolly?
It was February 18th, 2020.
Okay, so there we go. We have a low of 48 cents. And I guess that puts you at about an eight bagger there, Mr. Kun Kun. Very nicely done. Um, but I mean, that's again, yes, the silver price has gone up, although, as you pointed out, now some of the mining stocks are going up even higher. I'm trying to get this question out because I'm tempted to go right to the drill results, which have helped to account for a nice 5% plus move in your stock today. But just if you could, any thoughts on that journey? And I don't know if you happen to remember the size of the market cap then versus today, but it's fun talking about silver when we're seeing the rally, but also as someone that really, for the crux of when I've been doing this show, to see your journey and on a day like this today.
Look, I don't think this silver market's begun. I think once we break through 50, 50 is ground zero. And we started our journey back in February of 2020. I inherited a company that had a $20 million market cap. Let's just call it $1 a share to keep things simple, Canadian. So call it 75 cents a share US. And today, the company is a $4 a share. The market cap, in Canadian dollar terms, is 500 million. And so we've seen, let's call it, the share price is up. You say eight times. I'm just going to conservatively say, for all shareholders, let's say 5 times. It's returned 500%. We've seen the market cap grow from 20 million to 500. Now, how have we done that? Well, look, what we were trying to accomplish back in 2020 is we examined the market, and our takeaway from the market 5.5 years ago was With silver below $20, there was not a great deal of incentive, zero incentive really, for a silver miner to explore or to develop. And my thinking was there's probably going to come a time in the future because of monetary policy, because of the amount of capital and work that was going in to prove up future mineral deposits and resources. And quite simply, my thinking was let's inventory ounces. So, how do you do that? How do you build a vault of silver in the ground? Well, you can do that through exploration, through drilling discoveries, and you can do that through acquisitions. So, what Dolly Varden has done is we've done five major acquisitions. So now we control five past producing high grade silver mines, all in one district. We've got 100,000 hectares of prospective ground in the richest area on planet Earth for gold and silver. So we're in the right rocks. I'm trying to secure the future silver in Canada, right? It's the future of silver in Canada. And what we've also employed, in addition to the acquisitions, is we hired a group of scientists who looked to make discoveries. They expanded known veins and deposits. And so we've seen our mineral inventory grow dramatically, but we've also needed a lot of capital to execute that plan. So we've raised about $150 million Canadian along the way. We've attracted some wonderful investors, corporates, notable investors like Eric Sprott, but also notable institutions like Fidelity. And today we put out some drill results. And so right now up at site, we've got five drill rigs turning. We're in the midst of one of the largest drill programs the project has ever seen in a single season. It's a 55,000 meter drill program. And we've put out today arguably the greatest result the property's ever seen from a grams and meters basis. So we hit 1,400 grams of silver over 21 meters at the Wolf vein. And so we have identified a lot of silver. We're finding a lot of silver, and we're finding it at grades that I would say are second to almost none. And we're doing all of this in a safe jurisdiction where you have certainty with the locals, whether they're First Nations, Indigenous locals, or they're the local communities. They want us there. They've been experiencing mining operations for 100 years. So we've got a high-grade project. We've got a large project. It's in a safe jurisdiction. And so that the business is operating well. The share price is at or close to an all-time high. And we've got a lot of results pending. We've also got a very healthy cash position. So with $40 million in the bank, we could continue to be aggressive. And we're fully funded not only for this year, but we've got money to take us into 2026 and update resource estimates, put out economic studies, and also launch the next drill program. So look, Dolly, what Dolly really represents, though, is, Chris, if I were to sum up silver with one word, it'd be scarcity. Silver's scarce. That's why it's going higher. There's only 10 primary silver producers that investors can get exposure to and leverage. And then outside of those 10 producers, there's just a handful of companies that are the next in line that are either going to be acquired by the producers or they're going to become the next great silver producers. And where Dolly Varden positions itself is, in my opinion, outside of those 10 producers, I believe we've positioned the company as investors' number one choice because of where the project is and what the project is. And that's sort of, I hope that sums it up for you.
Yeah, and actually something that I'm guessing, especially for people who are somewhat newer to the mining side, when you have these results here, the 1422 grams per ton over 21.7 meters is certainly extremely good news. But then obviously you have the 10,000 grams per ton over a meter. Now, I think most people know this, but there's some who might be new. That doesn't mean that, oh, we're going to hit the average yield is going to be 10,700 grams per ton. But Sean, can you explain to people when you do get an intercept like that, what that actually does tell you and how you interpret that subset of the results?
So look, historically, we've got this abundance of past producing mines. One of them was averaging 1,100 grams per ton. Another was averaging 466 grams per ton. I like to be conservative and I like to look at averages. So if we can produce product here that's averaging over 300 grams per ton of silver, we're very, very happy because of um, the the composite of the vein, because of the width, because of its proximity to surface, just because of the very nature of it. So I'm not looking for, forget the 10,000 grams per ton, forget even the 1,400 grams per ton. But if we can build up some tonnage north of 300 grams per ton in an environment where you've got plus $25 silver, and I think we both can say pretty confidently we're in that environment with a four handle there with $40 silver. I think we've got a very, very compelling project. It used to work at a time where silver was sub $1, right? And now we have to think about nominally inflation adjusted what that price looks like today. But having said that, if something worked in 1919, if something worked in 1959, and we're finding more of it, now you've got good infrastructure. Now you've got certainty with laws. Now you've got higher metal prices, and now you have more of it. That to me, is we're starting to make that transition from advanced explorer to future producer.
And may I also add, and now if you have Jerome Powell getting ready to cut interest rates, well, Donald Trump's getting ready to bring in someone who will cut interest rates even further. We could add that on as good news in your case there. I've amused myself thinking that why doesn't Trump just bring back Bernanke, who could be the one guy that actually would cut interest rates far and fast enough to even make Trump feel uncomfortable if such a thing is possible. Yet, more importantly, Sean, two last ones here before we let you run, because I know you got a busy day there with results like this. But you mentioned something during your presentation at the Rick Rule show that I told you earlier today I thought was rather intriguing. So hoping you could share that because during the presentation, I don't remember if someone asked a question, but somehow it came up. If for some reason the company were sold, what you would do, and perhaps you could share that here today as well.
Yeah, I think if I go back to that presentation, the point I was trying to get across was what we're looking for is we're not looking to trade our silver for cash. That's not the idea here. What we'd be happy to entertain is a share deal where we find a company like, look, we've done a really good job of driving Dolly Varden forward in a very tough environment where you had $11 silver and you had a lot of volatility and you had a market that was scarce for capital. We've done a good job of building little Dolly from 20 million to 500 and getting the share price from under $1 to over 5. We've done an elegant job, listing the shares on the New York Stock Exchange, making the acquisitions, raising $150 million. If somebody came to me with a cash takeover bid today, that would be less appealing because I think that cash is trash. And I think that, these metals are what I want to be exposed to. So what we'd really celebrate is we would evaluate a company, and if we like their growth prospects, we'd consider a share deal. Now, maybe you've got a more elegant way to sum up what I'm really trying to say here, Chris.
Well, I don't know if it's more elegant, but I guess what really stood out to me was just, and especially the way you phrased it today as well, but definitely at the conference where you didn't want cash. You would want to maintain the exposure. So if someone came with some offer that the board just couldn't pass up, that I just thought it was telling of what you feel about what you're doing. And
Well, the other thing is like what we'd really want, because I think for a lot of investors, if they wanted to make 5%, they'd buy a term deposit, right? And so I think for a lot of investors that buy the Dolly Vardens of the world, they want us to swing. And one of the points I made at the Rule Symposium was, for 4 of the last 5 years, I've been playing defense. I've been, gently ducking my head out of the hole, making sure it's safe, and being very cautious. And now 2025 is a year I've switched to offense. And that's why we listed on the big board, and that's why we've gone from 15,000 hectares to 100. It's why we're in the midst of our biggest drill program. It's why we raised an additional $28 million despite having 20 million in the bank. It's go time. And I'm watching companies in the silver space who are acquisitive be rewarded for their growth. And this is a time to grow. And this is a time to be aggressive. And, that doesn't mean we're not changing our philosophy around grade. We're not changing our philosophy around a number of different key components that investors celebrate, but we are just moving at a much quicker pace. All you'd have to do is just read our Q2 financial statements and MD&A. It was the most active quarter in the company's history. And we're not stopping. Chris, sadly, I took a day and a half off this summer, right? Like it was the market's on. This happens maybe 3 times in a century. You need to work. And this is the time we're putting in the work and we're being rewarded. So it's a wonderful time to be a shareholder. It's a wonderful time to be in management. And the other thing I want to highlight, what differentiates Dolly Varden, is our whole philosophy of how we see ourselves is different. Our shareholders are at the top. Our board reports to those shareholders, and our management team serves the board. I'm not a CEO that's on top of this company. I'm a CEO that's at the bottom, reporting to a board who's serving shareholders. It's a philosophy, and I think it's the fundamental reason why we've seen the dramatic growth we've seen. And I'll say this, there's probably projects that are richer than Dolly Varden, that are bigger than Dolly Varden. But I think if you factor in where it is, who's running it, who owns it, and our philosophy, that's what makes us special.
well said, my friend. And yeah, I heard you mention that today in the call you did with David Morgan that we aired on Tuesday, talking about going from defense to offense, which I think it's a nice feeling. As you said, I have this image of like, someone training for a boxing match and, not my favorite sport where people are killing each other. But, when that guy's on the rope and all of a sudden you're not playing defense where you feel all the training, all the preparation, and now it's time to tee off and be aggressive in a responsible way, though. Just nice to see. And I know you saw
Can
my
I live?
text.
Yeah. Can I
Yeah,
continue with the boxing analogy?
sure.
It's
As
like
long
we're
as
the
you will recognize that I texted you a hockey metaphor, skating to where the puck was. So expanding my Americano-ness here, but go ahead, please.
Well, listen, my father was a big Cassius Clay, Muhammad Ali fan.
Yeah.
And I learned at a very young age the strategy of rope-a-dope. And for 4.5 years, we were just taking our punches, just taking them, taking them, taking them, taking them, taking them. And now that our opponent is tired and clumsy and disoriented, now we're hitting back. And it's time to move. And so that's to use your boxing analogy. Now, if only I had a silver Bernanke figurine on my desk to share with everybody.
We got to work on that. We got to work on that. I'm almost up enough on my Dolly stock to be able to send you one of these days. Yes. And by the way, you mentioned your
Is,
opponent. Go
is
ahead.
yours handy?
Oh, he's here.
Let's see him.
Look at I think the bald forehead gets even bigger with you can see it. Look at the size of that thing. Look how happy he is. I think he knows Trump's going to make him his pick. And he really would be perfect for Trump. And the whole helicopter thing, that wasn't just, smart asses like me who made that up. He actually wrote an article for the Institute, three-parter in 2016. What do you do if the Fed runs out of toolkits? He talked about negative interest rates, yield curve control, and helicopter money. He wrote it, not me.
Yeah, I remember helicopter money. Yeah.
Although, hopefully, Sean, you saw my funny recaps of those, some of my finer work, if I may say so. Real quick before we let you run here, interesting week last week. We did have the news of Saudi Arabia listed on the SLV purchasing report, which would be the second government after Russia. Now, I heard Jeff Christian in a video said that it was on behalf of another government. If that's the case, still some government invested in SLV. But aside from that, we also had the silver getting added to the critical minerals draft list. Sean, I know you're aware of, and were you part of that initiative that was petitioning the Canadian government 2 years ago? I know you're aware of it. Were you actually part of that one?
So all credit goes to First Majestic that took the leadership, but we did put some support letters in and followed their lead.
Okay. And I remember talking with Keith, and what I'm getting at here is when people hear, and to be clear, it is not official yet. This is their draft list, which my understanding is there is a 1 month period after which then perhaps it could be official. But in terms of what the actual impact it is, I know some people I've seen messages mean they're getting ready to confiscate our silver. I don't think that's necessarily the intention behind it. Keith said that the main tangible impact was that permitting becomes easier, but anything that you could add to that?
Well, also like up here in Canada, the dilution to a company and the cost of capital decreases once you become a critical mineral. There's more advantageous tax and less dilution for companies once you go critical from precious.
Okay, and I know you're familiar with the news from MP Materials after rare earths were the government realized, oh, if we don't get these, we might not be able to go to war. So that's a problem. And they pushed legislation forward and actually took a stake in MP materials. So who knows? Maybe you'll be getting a phone call from Trump. You can tell us about next time you come on here. But interesting times. And again, really exciting to see the success you guys have had, not just today, but I'm going to pull it back up one more time before we let you get back to what you're doing there. Because yes, news came out today, but I think you've described quite well all the years of things that went into being an overnight success, as some people view it. But I just want to say congratulations to you on this and great news. And it's really been an honor and a pleasure following your journey. And gee, we still got 4 months left, Uncle Hunt. So who knows? I didn't even go on and on about. I loved the quote of, people were asking me, well, is the market so depressed? Is anyone taking advantage of it? Which is one of the things that you've done and you talked about with David. We'll have the link at the end of this video. If anyone hasn't seen David's deep dive on Dolly, that'll be coming your way next. But Sean, thanks for making some time today and congratulations on the news. Congratulations on a $41 silver futures price. You want to take a stab if do we hit $50 in 2025?
I'm very, very happy with 40. Everything above here is gravy.
All righty, that's a wise answer from a silver executive. I like it. This guy's been trained well by someone, and good to see that Dolly is in good hands. And Sean, we will look forward to catching up with you again soon, my friend.
Thanks so much, Chris.